If you are anything like me, then you have an attention span about like a goldfish, which they say is 11 seconds. And that is why I've challenged myself in this video to teach you an entire strategy in less than 3 minutes, and that's what I'm about to do. So if you want to learn about double bottoms with divergence, then make sure you stick around, make sure to click that like button, and make sure to subscribe. We're gonna get started right now. Now, double bottoms with divergence is just an entry reason. It's not actually a trading strategy. So we have to do the process I call CEST, or conditions, entries, stops, and targets, in order to make this into a strategy. In order to do that, my first condition is that I must see a market that is at a major level of structure on a higher time frame. Right now, my higher time frame is the 4-hour chart because I'm planning to trade on the 1-hour chart. Once I find my major level of structure on a 4-hour chart, I place a green box at that major level of structure. Now that I have that level of structure pointed out, I drop down to a smaller time frame. In this case, it's going to be a 1-hour chart. On this 1-hour chart, I start to look for my second condition, which is I must see a double bottom. Here's one bottom. We're waiting for bottom number 2. There's a double bottom. As long as I have a double bottom, I then look down at the RSI indicator. I will explain the rules for a double bottom and the rules for divergence after this, but right now I'm doing the quick version of it. So I'm looking for divergence on the RSI after I get a double bottom and a green candle. That green candle is my entry. What I use for a stop and target is quite simple. After entry, I have one ATR below the swing low of the first low of the double bottom. The ATR currently is 12 pips. 12 plus down to that swing low is 8. It's going to be a 20 pip stop loss. After that 20 pip stop loss, I personally like to get about a 1.4 to 1 reward to risk on my trades. So at this point, we can hit play, see how this trade would have played out. And that is exactly how I trade using double bottoms with divergence. Now that that has been taught to you, what I'm going to do now is actually slow down and explain the entire strategy. And what I mean by the entire strategy is I'm going to show you every rule you need to know about how I trade double bottoms, every rule you need in order to understand divergence, and every rule you need in order to understand how I find major levels of structure on my higher time frame. Again, this is more of a day trading version of this strategy right here because we're starting out on a 4-hour chart looking for major structure and looking for double bottoms and double tops. We'll go through that later. With divergence on smaller time frames like 1 hour and 15-minute charts. So with that being the case, let's slow down a bit and first off, talk about how I find major levels of structure on a higher time frame. So let's dive into how to spot major levels of structure on higher time frames. Before we do, if you were impressed by the fact that I got through an entire strategy teaching it in less than 3 minutes, go ahead and smash that like button down below. And if you're not already subscribed, do so because that was quick as hell. But the way I like to find major levels of structure on my higher time frames, there are 2 different ways. The first way is by looking at the previous level of resistance or support that was broken in a trend. This is how I've spotted out major levels of structure on higher time frames throughout my entire trading career, and it's never done me wrong. So in this case, we're in a downtrend, right? On the Canada Swiss, how do I know that? We just made a recent 1, 2, 3 move, broke below a recent support level. That recent support level is going to be my major level of resistance. This level, if the market pulls back to it, is likely to be used for trend continuation, pushing the market down into new lows. That's the first way I like to spot major levels. The second way is by looking for levels that have been tested and used multiple times by a market for resistance or support. So if you're looking at the chart right now, do you see a level that's been tested multiple times below price? We already have what we're going to do if price heads higher. What about below price? Below price, we do in fact have a level that has been tested multiple times right here. This level was support once and twice, and I'm sure if I scroll the chart back, we'll see that the market reacted to it again. Yes, it did. So with that being the case, the way you would set up CEST, your conditions are, I'm waiting for the Canada Swiss to either pull back to this red box. If the market does pull back to that red box, another condition I need to see is a double top. Another condition is that double top must have divergence on the RSI, and then you'd be looking for a red candle for entry. What you would be doing if this market headed lower is that if we head lower, my conditions are when the cat twist gets into my green box, I then wait, condition number 2, for a double bottom. Condition number 3, that double bottom must have divergence. Condition number 4, that divergence must be followed by a green candle. That is my buy signal. Then you have your stops and targets to deal with directly afterward. So those, just as a quick overview, that's how I spot major levels of structure. I'm going to have a lot of things to cover in this video in terms of the rules for a double bottom and the rules for divergence. So if you want more help on spotting major levels of structure, I do that in nearly every one of the videos I do here on YouTube. So go through a few other videos if you need help spotting major levels of structure. But now I'm going to move on to how to spot the rules-based approach to spotting double bottoms and double tops, because we're going to take a look at both of those in today's video. So let's jump over to that, and I'll see you in a second. Okay, so let's say you find yourself in an area of major structure. In this case, the previous resistance that was broken has now been pulled back into. It's likely to become support for this market. At that point, we drop down to a smaller time frame, and it depends on the time frame you're trading. I'm using this like a day trading strategy, so I'm trading on the 1 hour and the 15 minute. Therefore, my higher time frame is the 4 hour. It's very, very easy to do. If you're going to be day trading on the 5 minute chart, use the 1 hour for your major levels of structure. If you're swing trading on the 4 hour, use the daily. Super easy concept to understand. Now that we're here though, what are the exact rules for a double bottom? Well, let me lighten this up a bit to make this extremely easy. What I'm doing when looking for double bottoms is once I have my first bottom, let's say the market is right here, I do nothing more than put a box between the bodies of the candles and the wick of the candles on that first bottom. What I want to see is a candle that at least touches the top of that box. The candle can close inside that box. A wick can go past that box. What I do not want to see is a full body of a candle close below that box. In that case, I'm seeing trend continuation and I don't want to place that trade. But anything other than that, as I said, to go over it one more time, the wick of a candle touching it, the body of a candle closing in it, or the wick of a candle closing past it is all considered a valid double bottom for me. So let's see what happens here on the New Zealand yen. We have a double bottom now. That was a question. I know I said it like a statement. Do we have a double bottom here? Yes, we have a wick that touches the top of the box that I've created, which was just on the bodies of the first bottom. So at this point, we have a double bottom. Let's move forward. What are we looking for after the double bottom? Well, in this case, all we need to see is that double bottom has divergence. And I know that this is not a lower low, so this is not technically divergence, but this is how I trade double bottoms with divergence. So with this being the case, we have divergence. I'm now looking for a green candle to confirm the double bottom. Once I have a green candle that confirms the double bottom, I can look for that divergence. Here we have divergence on the RSI with our double bottom. And that green candle itself would be the entry candle. As you saw me place earlier, the trade would look something like this. I think we had a 20 pip stop loss, and your targets you can put wherever you would like. I personally like trading with a 1.4 to 1 reward to risk, and this is how that trade would have played out. Of course, they will not all be winners, but what I do want to do at this point is show you a winning trade I did have last week on the pound yen using this exact same strategy. So check that out right now, and I'll be right back. So here on the pound Aussie, we have a major level of structure looking left on the 4 hour chart. Since that is the case, I'm going to drop down to the 1 hour and the 15 minute chart to start looking for divergence and possible double bottom trades in this major level of structure. Okay, so on the 15 minute, you can see that divergence even more clearly as this market's consistently pushing down, the RSI is consistently pushing up. Now, using the RSI in the traditional way, I have a good reason to enter this trade. Now, what is my actual entry? That's not all I look for. You can't just trade based on nothing more than divergence. You still need some kind of way that is set in stone rules you enter the market. For me, it is waiting on this type of situation, this scenario. A double bottom, first bottom is here. Second bottom's here. Here's our neckline. I'll wait on this double bottom. At the second bottom, I need a green candle. Since that happened here, that is my set in stone entry. So I can go ahead and place this trade with a stop loss just below here and a target level of support here is even better because I can get a 1.4 up to there. So that's what I'm going to do. I'm going to go ahead and place this order before the market starts going against me. It's going to be a market order. We're going to buy. Our stop loss is going to be somewhere near 46 pips. And our target is going to be somewhere near 64 pips. And we're going to use 1% on this trade. We're going to risk 1% of our account. And we're good. There we go. Entered into the trade. Got to move our stop and target a little bit to account for the spread. And we are all set. So I'll keep you guys updated as this trade plays out. Just wanted to give you that analysis really quickly. So you just saw the analysis behind this trade. It's actually on the pound Aussie, not on the pound yen, as I said earlier. But what you see here is our major area of structure looking left on the 4-hour chart. We have our double bottom right here. Our double bottom did come with divergence starting oversold, creating divergence. And we did have a lot of divergence even on the way to this major area of structure. I'm going to click play because I did not get a chance to record the exit on this trade. So here's play on our market replay tool, really handy. I want to talk to you about the emotions here. This is painful. Watching the market go up into target, go down, almost hit your stop loss, go up into target, or go into profits, whatever you want to call it. It is painful whether you are a beginner, intermediate, or someone who is literally a professional trader. It still sucks to watch, but your job as a trader is to have the discipline to stick it out through this time if you have a tested plan, CEST, if you have a tested conditions, entries, stops, and targets that you've seen through historic data has provided an edge over the market, then it's your job to be disciplined to that plan and let the statistics play out. You will have losses, you will have wins, but your job is to sit here and let the statistics play out, be disciplined, risk a small amount so that you're not freaking out whenever you lose a trade, and let's see what happens if we continue. We got pretty close to the stop loss there. Look how many times this happened, guys. We went from in red to in green to in red to in green, almost getting stopped out here. We were actually about 6 pips away from hitting our stop loss, so not a huge deal. But then eventually the market did finally push up and hit our targets. Now, this proved this level, and the reason I look for levels on higher time frames like the 4-hour chart is because this level out here on the 4-hour chart that is extremely obvious, by the way. This was an obvious level that pushed the market around in a dramatic way. This level ended up being a huge reversal point for this market. If I click play, you'll see what I'm saying. This market ended up reversing completely and now starting a brand new uptrend from that level, which is really cool to see how major levels play a huge role in your trading. Combining those major levels with a double bottom with divergence, or the other way around, combining major resistance with a double top with divergence is by far my favorite way to trade the double top and double bottom divergence patterns. Let's get back to the video. Okay, so now let's take a look at the opposite of that. Let's take a look at a double top with divergence. So in this case right now, where the market is, we can see the market's pushing higher, but what if you wanted to place a counter trend trade? Because the fact of the matter is you'd have to pull back pretty far to get to the level where you could start looking for double bottoms. So you're thinking double top, you're thinking counter trend. What's our first step when we're thinking counter trend? We're on our higher time frame right now, so you need to scroll the chart back, see if there's a major level of resistance. Yes, I would count this as a major level of resistance. It is a level that has been tested multiple times, resistance, support. And not only has it been tested multiple times, it also has been reacted to in a major way by this market. So now that we're back in this zone, our steps are to see it as a major level of resistance. If we're at that major level of structure on the 4-hour chart or our higher time frame, what I'm doing is dropping down and seeing if I get that double top with divergence. So let's move forward here and see what we end up getting. We have our first top. What do I do if I get my first top? I just place a box. Very, very simple here. Just placing a box at the wick down to the top of the bodies. This is my termination point for this specific pattern. And all I'm doing is waiting to see if we get the conditions met for this double top, which are, I need to see a wick at least touch the bottom of my box or the bodies of the first top. And I need to make sure that a candle does not close above the bodies of my first top, but a wick can go above the bodies of the first top. Those are my conditions for a double top. And I also want to see divergence, but I only know if there's divergence after getting a red candle. There's my red candle. Do we have a valid double top? Yes. Do we have valid divergence? Looking on the RSI, our first top is in the overbought scenario and our divergence does exist. With that being the case, can I enter this trade short? Yes, I can. Double top, divergence, major area of structure, looking left, ATR above my first top, which is 10 pips right now. 10 plus 11 is 21 pips on the stop loss. So we have 21 on the stop and 1.4. I'll hit play and we'll see how this actually played out. As you can see, market crashed after getting that double top with divergence at a major level of resistance. So what you want to make sure you're not doing is just placing random trades based on an entry reason. The entry reason would be a double bottom with divergence or a double top with divergence. Essentially, you want to make sure you are only trading in this way at major levels of structure on higher time frames. And also, something I did forget to mention for my RSI settings, hopefully you stayed until now because otherwise you would not know this. So if you did stay till now, one, click that like button because you obviously enjoyed the video. And number two, the RSI settings that I have are a 10 period RSI. So I change it. It normally comes with a 14 period. I want it to move a little bit faster for this type of trading. So I set it to a 10 period RSI. The style for the upper band and lower band, they're still 70-30. And that's the settings for the RSI. And that's how to trade double bottom with RSI divergence and double top with RSI divergence.